all over India at 97 centers. The objectives of LIC. The major objectives are to spread life insurance much more widely and in particular to the rural areas and to the socially and economically backward classes with a view to reach all insurable persons in the country and provide them adequate financial cover against death at a reasonable cost. To maximize mobilization of people's savings by making insurance-linked saving adequately attractive. To bear in mind, in the investment of funds, the primary obligation to its policyholders, whose money it holds in trust, without losing sight of the interest of the community as a whole, the funds to be deployed to the best advantage of the investors as well as the community, keeping in view the national priorities and obligations of attractive return. To conduct business with utmost economy and with the full realization that the money belongs to the policyholders. To act as trustees of the insured public in their individual and collective capacities. To meet the various life insurance needs of the community that would arise in the changing social and economic environment. To involve all people working in the corporation to the best of the capability in furthering the interest of the insured public by providing them efficient service with courtesy. To promote amongst all agents and employees of the corporation a sense of participation, pride and job satisfaction through discharge of their duties with dedication towards achievement of corporate objective. The Life Insurance Corporation of India is still a monolith. It enjoys a tremendous brand equity and a high reach with a strong distribution network which consists of 7 zonal offices, 100 divisional offices, 2048 branch offices and 8.5 lakh agents. The zonal offices look into the development, planning and review of business valuations, recruitment, training of staff, supervision of divisional offices and so on. The divisional offices procure new business, plan and execute various new business operations, underwrite new business as well as securities and settle claims. Under each divisional office, there are a number of branch offices which procure new business. LIC has diversified its activity considerably by establishing LIC Housing Finance Limited, LIC Mutual Fund, Jeevan Bima Sahyog Asset Management Company, LIC International. Now the investment practices and policy of LIC, the regulatory framework. The pattern of investments of LIC funds have been governed by the provisions of the Insurance Act 1938, under which LIC has to invest at least 50% of its controlled funds in government or other approved securities, 15% in other investments which include loans to central governments, to state governments for housing and water supply scheme, up to 35% in approved investments which include shares and debentures of public and private limited companies, of cooperative societies. The characteristics of investment policy of LIC. The major principle underlying LIC investment policy is security of funds, and investment in speculative securities is not done. The thrust of the investment policy is to finance the priority sectors and socially desirable activities. To meet the rising demand of private sector for financial resources, LIC spends up to 35% of its funds in approved securities. The other investments include loans to socially oriented sectors like housing, water supply, sewerage, road transport and generation of electricity have been provided by LIC. Investments in money market instruments like certificate of deposits, treasury bills is done by LIC. Assistance to small and medium-scale industries is provided by subscribing to the shares of SFCs. Financial aid to the corporate sector by way of term loans and subscription to shares and debentures is provided. The General Insurance Corporation of India, GIC, was also entrusted to write directly the aviation, hull and liability insurance of the national carriers, that is Indian Airlines and Air India, the Hindustan Aeronautics Limited and the International Airport Authority of India. Functions of GIC: to provide need-based and low-cost general insurance cover to the rural population, to administer a crop insurance scheme for the benefit of farmers, to develop and introduce covers with social security benefits, to develop a marketing network throughout the country and to promote balanced regional development and make insurance available to the masses. GIC and its subsidiaries. With effect from December 2000, the 4 subsidiaries now function as independent insurance companies: the Oriental Insurance Company Limited, the New India Assurance Company Limited, National Insurance Company Limited, and United India Insurance Company Limited. The investment practices and policies of GIC. The provisions under Insurance Act 1938 mainly govern the investment practices and policies of GIC. Under Section 27 Clause B of the Insurance Act 1938, the investable funds of GIC are to be invested in approved securities, securities guaranteed by the Government of UK, debentures or other securities for money issued by a municipality in a state under any housing scheme approved by the central or state government, first mortgage on immovable property in India, immovable property situated in India free of encumbrances, fixed deposits with banks or cooperative societies, debentures of or shares in cooperative societies, preference shares of any company which has paid dividend on its equity shares for 3 years, etc. Till 2000, LIC and GIC and its 4 subsidiaries were the only public insurance institutions in the country in the life and non-life insurance sectors. Following the recommendations of the Malhotra Committee, the Government of India enacted the Insurance Regulatory and Development Authority Act in 1999. The IRDA has prescribed the pattern of investment of funds by insurance companies through the IRDA Investments Regulations 2000 for life insurance and general insurance companies to be applicable to investment made after April 2000. Insurance business in rural and social sector. The Insurance Regulatory Authority has issued the IRDA Obligations of Insurer to Rural or Social Sector Regulations 2000. Under Sections 32B and Sections 32C, every insurance company shall undertake to provide life insurance or general insurance policies to the persons residing in the rural sectors, unorganized sector, or for economically backward classes of the society as per the regulations. Every insurer carrying on insurance business shall undertake in the rural sector, in case of life insurance, 5% in the first financial year, 7% in the second financial year, 10% in the third financial year, 12% in the fourth financial year, 15% in the fifth financial year of the total policies written direct in that year. In respect of general insurance, 2% in the first financial year, 3% in the second financial year, 5% thereafter of total gross premium income written direct in that year. Social sector in respect of all insurers is compulsory. 5,000 lives in the first financial year, 7,500 lives in the second financial year, 10,000 lives in the third financial year, 15,000 lives in the fourth financial year and 20,000 lives in the fifth financial year. The future of Indian insurance market. With deregulation, competition has increased in the insurance sector. New products in the market provide a boost to the development of debt market in India. The Indian insurance market is not fully tapped as only 20% of the population have insurance cover. India accounts for just 4% of the global insurance market. Insurance penetration is required in the neglected rural markets, which could be achieved by a tie-up of insurance companies with cooperative societies, regional rural banks, self-help groups, NGOs and panchayats to distribute insurance projects. Granting more operational autonomy to IRDA can boost its regulatory and development activities.